house, you can do, there's a variety, there's a range of down payments. If you're looking for the very lowest one, there are a couple that are actually zero down payment. The veterans loan, the VA loan, is 100% financing, and then also the USDA loan, which is more of a rural loan out away from it's from the U.S. Department of Agriculture loan. So they want you to buy properties that are farther out away from the city. So if that's where you're looking, you might be able to get 100%. If you're looking for a loan that's just works anywhere for any income, then the FHA loan is a 3.5% down payment. So if you're talking about, let's say, a $200,000 house, that's about $7,000 down. The conventionals have a 3% down program. But if you're putting down anything less than 20%, you're going to pay PMI also as part of your mortgage payment, which is private mortgage insurance. So the payment is normally made up of 4 primary parts. That's the principal and interest, the taxes, and the insurance, meaning you pay 1/12 of your annual tax bill and your annual insurance bill each month so that you don't have a big bill hit you when those come in once a year when they're due. And then if you put down less than 20%, you're going to have PMI. So if you put down the lowest on a conventional loan, say 3%, you're going to have pretty high PMI. If you put down a little more at 5%, then the PMI percentage gets lower. And then at 10%, the PMI is basically cut in half. Mm-hmm. And then at 15% down, then you have PMI still, but it's very small. It's like a quarter of what you would if you put down 3 or 5%. And then once you put down 20%, you don't have to worry about it anymore. The other thing to consider,
forget about it.
Yeah. The other thing to consider is that you're also going to have closing costs in there for the purchase. Usually those run about 2.5% to 3% of the loan. So basically on let's say a $200,000 house, you're going to need, for an FHA loan with 3.5% down, you're probably going to need about $13,000 or $14,000 to get in the door. Sometimes you can get the seller to pay for that, but not so much like recently in this market where we have kind of a seller's market. You can also get a gift from a family member for some or all of that money. So I guess that kind of, did I answer the full question?
It seems like it.
Yeah.
Yes.
Yeah.
So yeah, you could get by with about, $7,000 per 100,000 is a rough figure, but if you want to put more down, you'll get a better deal. That's what it comes down to.
Paul says, "Good morning, listening to you guys. Why headed to Chick-fil-A drive-through, then on to work to flip that house." Paul's been flipping that house.
Flip them.
He's been flipping that house.
Flip them real good.
What's up, weekend fam? Good to hear y'all. Been taking the last 2 Saturdays off just to be lazy. Hey, I was wondering about you, Fred X Rich. Going to Aquatica last Saturday night, but unfortunately, I'm back to slinging those packages in Vero.
He's been off for 2 weeks.
Yeah, I missed him.
Who gets to take off for 2 weeks?
How dare
me,
you?
I'll tell you that
How
much,
dare
Don.
you, sir? You have a commitment.
Well, those packages must have piled up while he was off. He's got a mountain of work to do now.
Is that what's going on with?
Is that how it works?
With my stuff.
He gets back and there's just packages everywhere. He's like, "Am I the only one who works around here?"
It's just a mountain of packages, angry people.
It's like, yep, welcome back. You normally have 1 truck. There's 3 over there. Get busy.
Poor dude.
Here's a question. We had a pool and a screen enclosure built, and I want to see about reducing my PMI, but I was also relying on the increased value from the current market, and my mortgage company said it won't consider market trends in that evaluation. Is that typical?
I would say, in my experience, that's not typical because
they're calling them market trends.
Yeah, that's kind of weird.
Kind of rude.
Yeah.
Hashtag market trends.
I'll give you an example. I have a big mortgage servicer on my personal mortgage, which is PennyMac. PennyMac's one of the biggest in the country. And I had my house for just over a year, about 13 months. I knew the value of the house had gone up, a good bit. I called them up, said, "Hey, I think my loan to value is now below 80%. I didn't tell them I was that mortgage guy, but I told them that loan to value I thought was below 80%. I wanted to see about getting the PMI removed, and they had a system in place to do it. I had to pay $105 for someone to come out and do an evaluation of the property and see what improvements I had made, what things had been done. They normally want to see improvements along with that. So this person, if you put in a new pool and screen enclosure, it's an improvement that you've done since you bought the house. That increases the value. That's not about the market trend. So I don't know what they're talking about. But what PennyMac did, they sent somebody out. They evaluated the house, how it looks now. A week later, they sent me an email saying, "Okay, great, your PMI is removed." So I don't know what servicer you're with, but it surprises me. I might try a little higher with a try and kick that up to a supervisor, because you're not just looking at the market trend and what the market has done. You're also looking at what you added and improved on the property. So that should make a difference.
All right.
Great question. Thanks for texting that into 77031. You too can text in your questions and join the party.
All right. Somebody says, preach the word, Pastor Don. LOL.
Amen. Amen. Amen.
I think that's a reference to our religiously question.
Oh, there you go.
I'm getting through my first when I read this question at first, I thought it was a bad thing, but it said, I'm getting through the first hour of my crappy, and I thought, oh no. But then it was customer service job listening to Home Loans Radio. I was thinking, like, getting through the first hour of this crappy show.
I always wonder what those customer service people are doing when they're talking to me. Apparently, they're listed to real radio on the side.
Oh, I see. Well, yeah, maybe that's like someone at Target with an earbud in their ear, just be
that's awesome. They're like just like scanning Twizzlers, and then every now and then you just hear them go. Keep scanning.
They're like, that's a good program. That's a good mortgage program. I'm into that.
I like it. I'm glad we can help brighten up your otherwise crappy job. In your words, I didn't say it.
Hey,
you did.
We didn't say it.
What's
the lowest credit you've seen someone get approved with?
The lowest credit score.
Yeah, sorry.
Yeah.
Wait. Let me guess. 370.
Oh, dear Nor. No.
Dear Nor.
I was dear Lord.
I broke her brain.
Mixed with no. Yeah, it happens to me a lot. It's like that thing you said where you put the words together, but mine don't make sense. Yeah.
Portmanteau.
Portmanteau.
They're just random, and I do it when I have two words in my head and they come out as one.
Yes.
So I do it a lot. I might guess you're going with 3 what, Fritz? You want to change that?
370. No, I don't want to change it.
Okay. Fritz is sticking firm at 370. I'm going to come in at 650.
So the question is the lowest score I've ever seen get approved for a loan.
Yeah.
Come on, 370.
I would say
370.
About 545.
Ooh.
That's still pretty low.
Yeah, but that was in a different time. So like now the minimum scores for an FHA loan are down to around 600. I've seen them as low as 580, but there was a time when you could go all the way down to 540 and still get approved for some lenders. That's kind of gone by the wayside.
Did I say 650?
Yeah.
That's terrible. My brain's not working.
Save that tape right there. Fritz.
Noting at 943.
I apologize. Of course, that's ridiculous.
Yeah, but if you're at a 600, you have a chance of getting pre-approved now. But I was saying earlier, this new thing that came out with Fannie Mae, they're allowing. It's brand new. We've got one that we're looking at putting together right now, so we haven't even done anything with it because it's so brand new. Yeah. Is where they're allowing score averaging. So if you have two people on the loan and one has an 800 score and one has a 400 score, theoretically we should be able to average that into a 600 score and do the loan. I haven't done it in practice. They released the guidelines. It's available for us to use. So I think that the lowest score I've seen approved number is going to change based on this new program. If you're one of those people that as a partner, you're married into some awesome credit. Well,
lucky you.
They might be able to put you on their back and carry you across the threshold of your brand new home.
Well, everyone brings different things to the table.
Yes. Well, interest rates are low, still low, ticking up a little bit though. I think you need to take advantage of it. If you're thinking about refinancing, you've been thinking about it, get off the pot, so to speak. Time is a wasting. The rates are starting to tick back up a little bit. And you want to take advantage of that. I make it super simple. You don't have to call me. You don't have to set up an appointment. You don't have to go to an office. You just go to homeloansradio.com. Up at the top there, you click the button that says apply now. You put in your information. We will email you back a quote in writing. You look it over, you give it the up and down, and if you like it, fine, we'll move forward on it. If you don't, that's great too, but at least you'll know. There's no charge for that. homeloansradio.com. Apply now. We'll get you a quote.
Peace of mind.
Yep. Taking a quick break. Be right back.
You're listening to Home Loans Radio on Real Radio. Now back to the show with that mortgage guy, Don.
Good morning. You're listening to Home Loans Radio with that mortgage guy, Don. He's telling us all the mortgage stuff.
All the
so
stuff.
Exciting. It's so good. You're so lucky.
Wow.
Hey, Don.
Hey, welcome back to the foe. Welcome back to the foe, Shokes. Here with my crew, MJ.
Joe.
I could eat some pho right now. That's a good time.
Pho is good.
That's good food.
Mm-hmm.
I'm here with my crew, Fritz and MJ. Good morning, fine folks.
Good morrow, Don.
Good morrow. We also got in the studio this week, Mike shadowing
Silent
for
Mike.
Fritz.
Yeah, that's right.
Silent Mike this week.
Let's see if I can.
Shadowing Fritz. He's going to be joining us next week because Fritz is going on a little vacay.
What? That
Yeah.
can't be.
Would you like to hear Mike?
I think I'm here to say hi. Can
There
you hear
you
me?
go.
Oh,
Hey.
hi, Mike.
All right, here we are. Debuts
All
are
right.
being
there you
made.
go.
Wait a minute. You know there's a rule that nobody can come on the show with a deeper voice than me.
Wait, man, Mike, you're gonna have to hike it up. Like, give yourself a little pinch and get it up a little
I
higher.
can get up there a little bit.
There you go.
There you go.
All right. Mike's here shadowing, going to be with us next week on the show while Fritz just goofs off on a weekend.
gal-
Yeah, I'm going to
Gallivanting
South
around.
Florida. I'm just gonna have a dang old good time.
All right.
Good. You
do that.
deserve it. You
Thank
deserve it. You deserve a little time off here and there. But that's it. That's it for the year. No more time off.
Understood.
That's right.
I'm
Just like
just
FedEx Rich, when you get back, there's gonna be stuff
some
stacked up for you
splaining
to do.
Exactly. Welcome back to Home Loans Radio, folks, where we talk about home loans on the radio. You see how we did that? You see what we did there?
That's really
We
on the
answer
nose.
Pretty
your
nifty.
questions. Yeah.
Mhm.
You can text them into 77031 and I will answer them live on air here. You can also go to homeloansradio.com, click the button that says give Don a shout, and you will be able to record a an audio question that we'll play on air, and we'll answer that as well.
Here's a question: how do I go about putting my house in the name of a trust?
Well,
You just have to name the house that, I think. You just put a little placard. Hello, my name is name of the trust. Points.
I don't think that's what he's looking for, Fritz, but well done. No, a trust, you're going to need a professional involved to do that properly because a trust requires a lot of ins and outs. It depends really. Every trust is different for every kind of person, group, or family. You know, it depends on how you want it to be: a living trust, revocable trust, non-revocable trust. You're really going to need an attorney, a trust attorney, to help walk you through that. They'll do kind of an interview consultation and figure out the kind of trust that's going to suit your needs. I don't know what you're trying to accomplish. You know, if you're trying to get it something out of your name for liability reasons, or you want to be able to pass it on to family members in a reliable way. So yeah, I would say the best way to get your property in a trust is talk to a trust attorney, and they'll figure it out for you.
Awesome. Your opinion on selling a house with the new rates. I only have 6 years left on my mortgage. Should I sell now or should I wait? Should I stay or should I go now?
Oh, that's a good sign.
Well, I would say the rates that we have right now are kind of record low rates. Over the last 50 years, there's only been a handful of times where you can get rates down at 3% or less if you're super well qualified. So if you're looking to buy, I'm imagining that you're looking to buy something that's an upgrade. The bigger the house that you're thinking about buying, the more urgency I would place on doing it with a low rate, because it makes a big difference. If you've got a 3% rate on a $500,000 house, that's going to be a really, really big difference in what your payment would be. If you had a rate a quarter point higher, your payment would be about $100 a month higher at least. So I would say buying sooner rather than later. We're also kind of at the top of the market as far as selling. If you're going to sell, I would sell now. Whatever you've got left on your loan, you just pay off when you close. I can't imagine that it's a big percentage of what you would walk away with. So I would probably think about doing it right now if I was going to do it. I bought a new house August of 2020 for that reason, because rates were so low that I felt like I was getting it for free practically. And it was, even though it was an upgrade in house, the payment didn't really change that much because the rate was so great.
Awesome.
Yeah. Excellent question. Thanks for texting that in to 77031.
My wife doesn't have her own income. Would her credit score still be able to use for the new average thing you were talking about?
Yeah, absolutely. You can have somebody on the loan. I was talking about it earlier that Fannie Mae now has a program where you can do credit score averaging between the borrowers on the loan. Brand new. It's never been done. They've never tried it. It's always been the lowest score, or if your score was below a certain level, you couldn't be on the loan. So they're changing that now, or they have changed it, where you can be on the loan even if your score is low, and they can average it with your really good credit partner who's on the loan. You can be on a mortgage loan without having any income. You can be on there as a homemaker or You don't even have to put a designation, but there's all the time I do loans where we have one spouse that works and the other one that takes care of the kids in the home, but wants to be on the mortgage just in case something happens to the other person, or whatever personal reason they have where they both want to be on the mortgage. So absolutely, you can do that without any income. If you want to find out more about that, hit me